Happy New Year, everybody, and welcome back to another edition of your Bitcoin Economic Calendar, the news and analysis that you need to know for the week ahead in Bitcoin. The new year started out with a new rally, and with Bitcoin in price discovery mode, in today's analysis, we're going to look at the levels to watch for this Bitcoin rally. We're also going to dive into the Bitcoin futures markets, both standard futures and perpetual swaps, and look at what those markets are saying. And finally, we're going to compare how two different companies fared the recession by comparing Domino's Pizza and Cheesecake Factory and seeing how two restaurants basically had two very different outcomes from the same situation. So, without further ado, onwards to our analysis. So starting as we usually do with Bitcoin, looking at the chart behind me, we see that the new year brought with it a brand new all-time high for Bitcoin, and it started the year with a bang. It quickly moved past the $30,000 level, and as you can see here, it touched on a high of almost $35,000 before settling the week to close at $33,080 for a total weekly gain of almost 26%. So it was a monster week for Bitcoin. And the holiday period seems to have really cemented Bitcoin's narrative across retail investors. And signs of more retail activity are starting to appear. Signs of retail activity linked to speculation. This has been good for Bitcoin price. However, when things start to get overheated, it is possible that more volatility will ensue. We're starting to see some of that this morning already. Interestingly, Bitcoin's volatility, as defined by the magnitude of its price moves in a short period of time, has actually been on a tear. It's just hard for many people to be upset about it because there's been volatility to the upside. Now, with that said, let's look at some of the signs that there is increasing speculation activity in the Bitcoin markets and in crypto markets in general. So one of those first signs that we can look at is the dramatic increase in funding rates. So we're going to put a small comparison chart here in the background so that we can see this. But essentially, what we're trying to show here is that the funding rate for the Bitcoin Perpetual Swap on FTX has increased over three times from its standard 30-day moving average. So actually, this was showing here yesterday at the moving average, and it's no longer showing this morning because these futures tend to move quite quickly. But we can see this actually the same effect here in the Binance contract. So notice here how the 30-day moving average is at 0.03% as far as the funding rate, and the current rate is at 0.23%. So that is actually almost a 10x increase in the funding rates. These are a good sign, or tend to be a good sign, of increased speculation activity. And we're going to talk about why in today's market trends section. The other trend that is interesting and basically signals a similar basically trend is the rise in the altcoin market caps. So as we can see from the news last week, we had Dogecoin, essentially, which is a meme coin, go up by 112% last week. Again, this is similar to some of the price action that we're seeing in assets such as XRP and even EOS. So these tend to be signs that more speculators are moving into the lower cap tokens, essentially, in expectations of seeing similar moves than they have with Bitcoin. Now, another monster rally that we had over the week was Ethereum. We see that it rallied 43% last week, which again can be signs of people just moving into smaller cap stocks, or sorry, not stocks, smaller cap assets, which is a sign, or tends to be a sign, of speculators looking for essentially returns similar to Bitcoin. We'll talk about what we can expect for Bitcoin in our What's Ahead section later today. Moving over to the S&P 500, we see that the index gapped higher last week. And by gapped, we mean there is no continuity between the candle in the previous week and the candle in the opening week on Monday. So here we can see this is what's defined as a gap in some trading circles. It's very positive. It means that basically the asset took off in the following day in between that short trading break. So essentially what we see here is that after the stimulus bill was announced that it would be signed and moved across last week, we had the index basically gap higher and never look back. It closed at a record high of 3,556 points last week, and that meant, or that was equivalent to a rally of 1.43% for last week for the S&P 500. Now, like we mentioned, the rally was in the back of the newly signed stimulus bill, which saw stocks like Google, which we see here, had a good week last week. Amazon also had a good week last week. Tesla again, really good week last week. And Disney, again, really good week last week. So all of these combined to essentially elevate the market at higher levels. And even stocks like Facebook, which is actually amid a large antitrust lawsuit from the United States, actually had a good week last week. So all of these combined to essentially bring the market higher. Now, the background continues to be positive, although there may be some headwinds with shutdowns and travel restrictions given this new strain of the virus that is making its way across developed markets or developed economies. So these may affect or cause some more disruptions in the weeks to come. Now, these headwinds can affect everything related from tourism and the service industry, with delivery first options being the clear winners in these trends as far as restaurants go, over dine-in concepts. And just to show a quick example of that, we wanted to compare the story or the journey of two different restaurant stocks across the 2020 markets. So we'll dive into that by comparing both Domino's Pizza and Cheesecake Factory. Domino's Pizza being a delivery first restaurant, Cheesecake Factory being a very dine-in heavy restaurant with a lot of locations across malls in the United States. So let's take a look at those two shares of those two companies and see how they fared in 2020. So first, let's take a quick look at Domino's Pizza. So Domino's Pizza started out 2020 at around the $290 level. It went down at the beginning of the year, but it actually had a very big rally in February, corrected all the way down in March, as did many other shares and the market itself. But however, since then, it has been essentially in a very strong rally, so that it's currently sitting at the $378 level, which is a significant rise given where it was at the beginning of 2020. Now, let's contrast that with the performance of Cheesecake Factory, which again started 2020 off relatively okay, had a good January, February, but once it crashed down in March, it never quite recovered. And you can see here that it actually closed the year 2020 below where it started. Now, just to make this comparison a bit cleaner, we can essentially try to compare the Domino's Pizza stock with the Cheesecake Factory stock in the same chart. So I'm just going to add that here. And as you can see here, by having the two of them in the same graph, it's a very clear difference between how the two perform. And this is just one sign that the market is preferring, both from a consumer level and from an investment level, to basically opt for restaurants that have dine-in or delivery first or remote first options. So this is just one such example of many that we're likely to see in the continued months to come. Moving over to gold, we finally saw some signs of life last week on gold, with the precious metal closing up 1% to $1,897 per ounce. This is actually quite a significant move. A 1% move in a market like gold is quite significant. We're actually seeing that it's moving much higher this morning already, up 1.86% to start the week. Now, although, like I mentioned, this is a relatively large move for a market such as gold allocations may come under pressure in early 2021 as meetings with fund managers, basically as fund managers have a hard time defending in meetings large allocations to gold without any exposure to Bitcoin. While there should be more demand for gold in general, given the backdrop and the weakening dollar, the relative opportunity cost to Bitcoin in portfolios can create a headwind in gold allocations vis-a-vis Bitcoin prices to the upside. Moving over to the FTX DeFi index, we saw that last week was a euphoric week in altcoin markets. As we mentioned earlier, we had Ethereum rally 43+% last week, and this helped the DeFi index essentially close a monster rally of itself, up 28.29% for the week. Now, enforcement actions against Ripple have continue to put a headwind on some alts, but even that has not been enough to contain the pressure of speculators diving into the space at a very ridiculous rate as of late. While yet again, we see that the DeFi index continues to underperform the protocol levels to the upside. Actually, this week, it actually slightly surpassed Bitcoin's upside performance. Bitcoin at 26%, DeFi index at about 28%, but significantly underperformed Ethereum at 43% plus. However, it is becoming evident that the market dynamics are starting to shift rather quickly, and this new influx of speculator activity will bring about a lot of volatility in alternative assets, orders of magnitude above the volatility that Bitcoin is seeing. Celebrity endorsements of obscure and unknown projects, which should also start relatively soon, tend to be a good indicator that we can be starting to reach a local top for the market. So we will keep an eye on these trends, and we'll continue to inform you of any relevant trends that we notice. So in today's market trends section, we're going to dive into the Bitcoin's futures markets and explain a little bit about what they are and what they can show us. So what you have on your screen right now, on the back of your screen, is the starting page of the Bitcoin futures in the Chicago Mercantile Exchange's website. So before we get into it, let's start with a quick recap of what is a futures contract, essentially, and a bit of history behind it. So simply put, a futures contract is a contract to buy or sell a commodity and deliver it at a set date in the future. The need originally arose from farmers trying to sell their future crops and lock in their prices to avoid volatility. The first example of a futures agreement dates back to the Code of Hammurabi, which was around 1750 BC, and the first modern example of it was Osaka's Dojima Rice Exchange in 1710's Japan. Now, fast forward to today, Bitcoin producers that can estimate how much they can deliver in the future also have a market for their future Bitcoin. So these tend to be miners. Of course, the market is not just limited to miners, because futures markets are so well established in traditional finance, they present a familiar venue for many market participants to get exposure to Bitcoin's price. Now, another difference or another distinction in the futures contracts is that they can either be physically settled or financially settled. Physically settled means that at the expiration date or the contract settlement date, the purchaser of the contract will receive the actual physical good. This is common in, for example, food processors, etc., or even oil refineries that actually have a need for receiving the actual commodity at the end of the future or at the settlement date for the contract. There is also financially settled futures, which is the case of the Bitcoin contracts in the CME. What this means is that at the settlement date, the purchaser of the contract will receive the dollar value of the asset at the time of settlement, basically as determined by the spot price. So those are two interesting distinctions in the futures market. And again, just to go further on the Bitcoin contracts in the CME, the futures contracts in the CME are for 5 Bitcoin. So each contract basically entitles the purchaser to receive 5 Bitcoin, or the financial equivalent of 5 Bitcoin, at the date of expiration. And the dates at which the contract trades are 6 months inclusive of the 2 nearest Decembers. So for example, right now, the available contracts are January, February, March, April, May, June, December 2021, and December 2022. So just so that we can see it here in the background, here are essentially the quotes for the active contracts today. So let's take a look at what these contracts are saying today, because this market just opened and it essentially has just caught up to all the activity that happened over the weekend. So what we're seeing here, and let's compare that to the current spot price of Bitcoin. So Bitcoin spot, we can see that it's right now at 31.89 basically. And if we compare that to the Bitcoin delivery in the third week of January, that Bitcoin's priced at 32,305. If we look at the February delivery, 32,780. If we look at the March delivery, 33,235. April is 33,465. And interestingly, May is 32,500. So what we're seeing here is that the futures curve tends to be steepening as it goes further out into the delivery dates. But what we're starting to see now is that, as we can see here in this Bitcoin contract, the May delivery date is actually below the April delivery date. So the curve is actually flattening as it goes further out. This can tell us that some investors are expecting Bitcoin to perhaps remain around these levels for the foreseeable future. Now that we have covered what a standard futures contract is, let's talk a bit about what a perpetual swap futures contract is, which has been popularized in the Bitcoin markets. So as we mentioned earlier, perpetual future swaps are a concept that Bitcoin also popularized. And this is a futures contract that does not have a settlement or expiration date. It closely tracks the underlying asset's spot price and settles every 8 to 12 hours with an interest payout between the investors who are long the contract and the investors who are short the contract to reach a balance between the two. In summary, if more people are long than short, then long investors must pay a percentage to the short investors to motivate longs to close positions, or more longs essentially to be added to that investment pool, and vice versa. If there are more shorts than longs, then the shorts need to pay the longs to motivate that balance to essentially shift and become even. Now, the mechanics are very complex, and frankly, we could do an entire episode about it. But the important thing to understand for now is that in these contracts, that aforementioned, or the payment that I just mentioned between the longs to the shorts, or the shorts to the long, to essentially neutralize or equalize the two, is referred to as the funding rate for the perpetual futures swaps. And these rates can tell us a lot about how investors are using these tools. A positive funding rate, as we mentioned, means that long investors are paying short investors. Conversely, a negative funding rate means that there are more short investors than long, and shorts are paying longs. So now let's look at some of the funding rates for major assets across major exchanges. Here we can see a bunch, essentially, but let's focus on the first three. So a few things that stand out from these rates. So as you can see, the rates for both Bitcoin and Ethereum are positive across the board on the exchanges. This means that more people are significantly long on these assets. Well, another thing that stands out is that we can also see that the funding rate for XRP in the FTX platform is negative. This means that more people are short than long the contract. And this is somewhat to be expected given the recent news of the enforcement actions that we're seeing towards Ripple. Now, the fact that the XRP rate is positive in Binance means that there is heavy speculation activity to the upside on that platform. Now, another interesting thing about these futures contracts is that because we know how often these settlement payouts happen, in the case of this, on these futures, they are normalized to 3 times a day. So in essence, we will basically calculate it here on the spot to tell you. But as you can see here, these interest rates of Binance at 0.23% every 3 hours works out to about 200% in annualized interest. That is very, very high amount of interest to be paying to be participating in this contract. This can only be profitable if A, the client is utilizing a lot of leverage, or B, the directional move in the market outpaces the interest cost. These two characteristics reveal another very interesting aspect of perpetual future swaps, which is, for one, they are mainly tools for speculation, as they provide just price exposure to the asset, but never actually let you own the asset itself. And secondly, the utilization of leverage is very, very common across futures platforms, which makes it a very high stakes game. As we can see, the funding rates for perpetual swaps can provide tremendous insights as to how short-term speculators are positioning themselves in these markets. Moving over to our Bitcoin mining difficulty commentary, we're still sitting at 18.67 terahashes, but as it was to be expected, we're already seeing some pent-up hash rate come back into the network, with the next difficulty adjustment showing a move up to 19.63 terahashes, or up 4.3%. Although we usually get our difficulty adjustments on Sunday evenings, this new influx of hash rate may actually speed up the upcoming adjustment to perhaps Friday evening or Saturday. Fortunately, the mempool has also handled the recent price action quite well, and transaction speeds are normal. We will keep you posted of any relevant updates throughout the week on this front as well. Now, as always, we leave you with what's ahead for the week. The new year has started with Bitcoin squarely on price discovery mode, having reached the 35,000 level just 19 days after breaching the 20K level. As we have mentioned here in the past, there are likely corporate boards and investment committees around the world working through the process of allocating some Bitcoin to their portfolios. What we may be witnessing here is a retail front running of the highly anticipated corporate purchases. What we can see the increase in retail and speculator activity by the ballooning futures funding rates and the levitating meme coins. Fortunately, these institutions may not be as price sensitive to their allocations as investors in the previous Bitcoin rallies. Recent events have more than validated the decisions of early pioneers, and the trend seems to be reinforcing rather than weakening. We expect to see several more announcements in the days and weeks to come of corporate purchases and other types of purchases in this type of circle. Separately, alongside the newly approved stimulus package out of the US, the reopening of traditional financial markets may bring about a wave of new capital from investment rotations. In some markets, investors are motivated to sell their losing positions at the end of the year, at the end of the tax year, to realize the tax losses and redeploy that capital early in the new year. Some of this new capital that looks to be redeployed could be looking to go into Bitcoin, which may present a tailwind for the weeks to come. As to how far Bitcoin can go, as we had mentioned here in the last issue, the options markets were showing activity at the 32,000 levels for June. We saw that level get breached over the weekend. The next level up for that June contract was the 40,000 level. While we don't expect to be there by next week, we do expect some turbulence, particularly outside of Bitcoin in assets with smaller market capitalizations. Given the new high levels of leverage being introduced to the markets with a new wave of speculators and quarantine retail traders entering the mix, this might be, like we mentioned, some turbulent times ahead. So operate with caution and do wear your seatbelts. And as always, we will keep you posted on any relevant information throughout the week through our social media accounts at HODL with Ledin. If you don't yet have a Ledin account, I invite you to visit ledin.io and check out how you can start earning 6.25 APY on your Bitcoin and 12.25 APY on your USDC. Thank you, everybody. Have an excellent week and see you next time.